you and I and everybody else seems to be doing is jumping in on this market. And according to the latest stats here from JP Morgan Equities, you can see that we are hitting some massive imbalance levels. Basically, for layman's terms, this means that everybody is starting to get hyped on different areas of the market, or maybe even just trying to buy the dip on software and tech. And when this type of thing happens, it can often lead into a pullback in markets. Maybe not a crash, but definitely something we need to be paying attention to. Some more notable ones occurred during, of course, the late end of 2021 into the fall of 22. And of course, we also saw a similar thing happen before Liberation Day last year. And this makes us wonder whether there's something a little bit weak underneath the hood. So let's discuss this together, go through the key leads, and then of course go into the charts and the things that we need to be looking at in more detail. But first off, this is actually the worst start for the S&P 500 in terms of its performance versus the world performance during 2026. And you can see here it's really starting to accelerate towards the downside, mostly led by AI concerns and of course the Magnificent Seven that we've been talking about here on the channel for the last 3 to 4 months. Particularly post the rate cut, we've seen a change in structure of markets, and let's just say that's not notoriously good, and maybe not enough people are talking about what it really means. You might think it's broadening, it is, and that means there's opportunity, but at the same time there is a certain level of risk. Now let's discuss that risk, and I think this chart here from Barry, Gilbert and Carson really exemplifies the problems here. And you can see it's all to do with the sectors that we've been talking about over the last couple of months. The energy sector, we first noticed oil services going ballistic back last November, and guess what? It's been the best performer this year. Energy now playing catch up as well, and the materials sector and gold also doing something very interesting. And this actually marks a very big pivot shift as well into hard commodities in general, because we're actually seeing de-dollarization continue to occur even after silver and gold's crash